Hi believers, this is Amit from the YR team, and I am here to provide our weekly bite and the road ahead in the markets. Markets remained volatile and ended the week in negative territory amid mixed domestic and global cues. Sentiment stayed subdued through most of the week and weakened further as selling pressure intensified, though a late rebound in the final sessions helped limit the downside. Persistent foreign fund outflows and a sharp depreciation in the rupee weighed heavily on investor confidence. As a result, both the Nifty and Bank Nifty saw a cut of 0.5%. In the broader markets, both the mid cap and small cap index lost about 0.6%. The market started the week with a steep, broad based correction. Over 805 stocks declined by 3% or more last Monday, a number not seen since the early days of May 2025. What was different this time was the emergence of buyers and increased buying activity through the rest of the week. The small cap index briefly broke its immediate support, but bulls ensured it closed above that level on a weekly basis. Broadly speaking, we believe that small and mid caps remain expensive, with the small cap index trading at 32 times earnings. At the bottom in March 2023, just before the start of the previous rally, the index was at 15 times earnings, with a new earnings growth cycle already underway. This time, earnings growth is yet to materialize at wide, while the index continues to trade at above average valuation multiples. As a result, we may not see a broad-based bull market just yet. However, this remains a bottoms-up stock pickers market. Over the last 15 months, our focus has been on risk management, identifying stocks bottom up, buying close to support, and not getting carried away by short-lived rallies. In a consolidating market, prices tend to overshoot on the downside before recovering and overshoot on the upside before correcting again. We appear to be closer to the former today, making it highly plausible that the next few weeks could see increased buying activity. It's important to note that foreign investors' activity is subdued. Hence, liquidity support is dry too, due to which stocks are taking longer time to bounce back. Foreign portfolio investors have persistently sold Indian equities throughout 2025 and are on track to post the second highest number of net selling days in any calendar year over the past 20 years. So far this year, foreign institutional investors have been net sellers on 141 of the 234 trading sessions, a figure that is likely to surpass the 146 sell days recorded in 2022 and trails only 2008, when net selling peaked at 154 days during the global financial crisis. Technically, Nifty has managed to reclaim the crucial short-term moving average, 20-day moving averages, near the 25,950 zone. Sustained holding above this level will be critical for extending the recovery toward the record high of 26,300, with further upside potential toward 26,600. Failure to maintain this support could lead to a retest of the previous swing low near 25,700, followed by the major support around 25,400, which coincides with the 100-day moving averages. The banking index continues to display relative strength and is holding above its short-term moving average. The 58,400 to 58,800 zone remains a key support area. On the upside, the 60,000 to 60,500 zone is the immediate resistance, and a decisive breakout could pave the way for renewed momentum. As long as Nifty sustains above 25,600 and Bank Nifty holds above 58,000, the broader market structure is expected to remain constructive. We recommend investors to stay selective, invest slowly, and maintain a balanced approach amid ongoing currency volatility and mixed global cues. Large cap exposure remains preferable, particularly in sectors such as private banking and automobiles. Export-oriented stocks may continue to benefit from a weaker rupee, though IT could remain range-bound given correction in the US IT-heavy index and Nasdaq Composite. Caution is advised in mid and small caps as valuations remain elevated and liquidity support has moderated. Besides, traders should avoid chasing stocks facing negative news flow in anticipation of a rebound and wait for clear signs of stability before taking fresh exposure. Finally, in macro news, the US Fed cut interest rates as expected. US stocks rallied this week before pairing gains later in the week on various news from Oracle and Broadcom, signaling slowdown in AI-related infrastructure building. The AI trade may be slowing, and with most AI stocks trading at absurd multiples, any further signs of tepid demand or delays in data center buildouts could trigger profit taking. Finally, rumors of an India-US trade deal are at an all-time high as PM Modi and President Trump spoke last week. Any change or reduction in tariffs on India could be a significant sentiment booster. That's all for today. Wishing you a profitable trading week ahead. Thank you.